Good evening, everyone. Good evening, guys. How is everyone doing today? Just to make sure that everyone can see my screen and also you can all hear me. Jerome, how are you doing? Jerome said, hello, coach. It's nice to see you here. Can see and hear your beautiful voice. How are you doing, Nick? You doing all right? Alessandro, how are you? See and hear? Yeah, perfect. Good, thanks. Nice. Where are you guys watching us from? Many of you, I already know where you're watching us from because I see you're regular on the webinars. Nick said, all great. Hope you're doing. Have a nice weekend. Yeah, Erickson from UK, Nick from England. So, everyone, I hope you had a great weekend so far. And without getting more into introductions, myself and the Elevating Forex team would like to welcome you to another webinar here. Of course, the disclaimer, just to ensure that everyone understands that this is for general information, education purposes only, and it doesn't intend to provide any financial advice or personal recommendation to anyone. So for those who are wondering, who am I, what am I doing here, and so on, allow me to say that my name is Theo. Over social media. If you want, you can check me. That's my professional LinkedIn profile. I'm also on other platforms like Instagram. And on a daily basis, actually, or before we go to that, just allow me to say a few words about my expertise in trading. I'm a certified financial technical analyst and also certified market technician. I hold the certification and diploma from the Society of Technical Analysis in the UK, this one here, that issued on April 2023. And I also hold from the International Federation of Technical Analysis another diploma here. I trade for the last 11 years. I'm a day trader and swing trader. I prefer to trade on a medium-term charts, okay, as I will show you in a while. I specialized in CFD and futures trading using the same methods that I apply to analyze the markets and also to place trades, execution, and so on. On a daily basis, beside my trading activity, I deliver market analysis for hedge funds and for prop trading firms. So this is the skeleton. I give the charts with targets, with levels, with what we expect to happen and where the market is hitting to each currency pair separately. And also, I prepare the analysis on a daily basis on what to expect every single day in terms of news events. And because we combine this with the technical analysis, we make great outcomes. So I also publish regular articles in financial magazines, and I've done some webinars with traders that they are known in pretty much all the trading world. Traders like John Bollinger, who invented the Bollinger Bands. If you have heard about that, or if you are using them, exceptional indicator, to be honest. David Coolings, who is expert in volume trading. And here it's Steve Ninson, the gentleman who introduced us to the candlestick. He wrote a few books, like the first books, let's say, we've been introduced in the Western world about candlestick, price action, and all this stuff. It's because of Steve Ninson, the guy here in the middle. And other traders like my friend Alex Spiroglu, who is a Greek fella that lives in the UK, George Fraser, who lives in the US, and many other more. So without saying more about this stuff, let's get on to the charts. Now, I believe we're going to have an interesting week ahead. Okay, so for those who is new on the webinar, let me know who is new here. Fred said being trading but made money. Sorry, Fred, I lost you somewhere in the in the chart. So just let me know who is first time here. So it's gonna help me, to be honest, to understand a bit better if how to explain a bit my strategy. First time here. Cancel. Nick, third time. Norway, you legend. Okay, so guys, what am I looking for? Every time I trade, before I initiate any trade, I look at the weekly chart just to get an idea of where the market is hitting to. And then I go down to the hourly time frame, and I just like to place the trades over there. Sometimes I look the 4-hour charts, but I primarily want to focus on the hourly time frame, because the candles, they change every hour. And moving from the Asian session to the London session to the New York session, and then make this cycle over and over again, it can gives us a better understanding of what's going on in the market and what do we expect happen in the market. So yes, Tommy from Spain. The hour has changed. Yes, yeah, we have a thing about the daylight savings. Okay, so we gonna keep the regular time, like as we said, 7 p.m. UK time, which we went 1 hour backwards. I live in Cyprus. I based in Cyprus, actually, so we also went 1 hour backwards. So let's start with the euro US dollar last week. And also, everyone, please, you must understand that as a day trader or swing traders, doesn't matter, the news on a daily basis and the news overall on the week, they are a significant part of our trading activity. Okay, so how do we introduce the news? We need to understand what can the news, think of the news, it's like a story in the market. It's like an endless story. Like last week, fundamentally and technically, the Australian dollar was very, very weak currency among the other currencies. This week, though, we expect the euro to gain some strength in the market. So if and the news will move the market, guys. The market will not move because there is something on the charts. The market will move because of the news. They will be announced, and the big hedge funds, the big banks, they're gonna trade trillions and billions of dollars in the direction they're gonna trade, because of the interest rates in the country, because of the consumer price index, because of the non-farm payrolls, and many other significant news that they're gonna move the market. So saying that, we create a story around what we expect to happen because we have the forecast given to us. And we use the technicals to identify, how I like to call them, the sweet spot where we can enter trades. Okay, so we don't need to know we don't need necessarily to trade the news, but we can use them as an add-on factor into our trading. Does it make sense? It's important. The euro now, it's been 1, 2, 3, 4 weeks in a row. This is the weekly chart. It's on a free fall, and it approached a level of support. Here it's a kind of significant support. There is so much of trading volume that took place down here. We do expect it that if the price will find some kind of double bottom or any kind of rejection on the hourly time frame, on lower time frames, it might gonna be the beginning of an upward, of an uplifting euro. All right, so I'm not gonna put the calendar in front of you and just playing around with the outcomes, but I've done that during the weekend and I present that to you. So on the hourly time frame, what do we see here? The euro was moving lower. At some point last week, the euro started make higher highs and higher lows. It penetrated through this swing high. And if we narrow our observation of what happened the last few days, it's going to give us a good indication of what we can expect happening in the next few days. So let's go through that. This is my trading plan. You can copy it, you can add it in your chart. This is my trading plan and how I will be looking to trade the euro US dollar in the next few days. So because we do these webinars only once a week and we don't do them on a daily basis, so I can give you the updated levels and all this stuff, I give you a wider sphere of these currency pairs we do the analysis. Okay, so the euro made this higher high, but if we consider this swing as the relevant swing, the price in two cases, and actually that was last Friday, the price created a false breakout here, and during the New York trading session, another false breakout there. All traders, they were thinking to go short here because of this pin bar. Look at this pin bar here. It's a very, very standout candlestick reversal price action pattern with a long upper wick, nicely false breaking this previous swing high, which means all the traders' stop losses they were sitting around here, they got taken out. Now, in case you were trying to go short at this level, if you were someone that took some coaching with me, you knew that at this point you will have been out of the trade. Why? Because once the price shows indication that it's about to reverse and move into this direction towards the south, the next few candlesticks, they must back up that move. It's important to know and read the market candle by candle. If you are trading on the 5-minute chart or the 15-minute chart and you don't pay attention to each 15-minute candlestick to tell you the story, the information, you are missing a significant part of that equation. The reason I trade on the hourly time frames, it's because I prefer to do that in terms of market bias, in terms of understanding. The hourly time frames, they consider as day trading, because if you enter here and you have a stop loss 15 pips, the market on average, it's going to give you 30 pips to go for 2 to 1 on the euro US dollar, for example, and the other currency pairs. Nevertheless, let's say you didn't, you got into this one here, you had a stop loss there. If you're new in trading, that's all right. Your stop loss got hit. You see this bullish engulfing here, and then you look the market moving lower and creating this move. Now, what do we, just give me 1 second. Give me 1 second, guys. So the price here, it left this swing. I hope you can see it. At this swing here, the market started making the new high, which it made a new high. In technical analysis, we do have two fundamental parts of trend trading. Is what we call the swing highs, the swing lows, what we call the failure swings, and the non-failure swings. These are stuff, they are crucial in trading, okay? You won't find them everywhere, but I'm telling you that these are important. This here is a non-failure swing top because it happened at the top. Why it's a non-failure swing? Because the market made it as a swing high, and at the same time, it didn't follow through like it follows through here, and it automatically appeared as a false breakout of this high here. So we call this a non-failure swing at the top. If it was at the bottom, we call it a non-failure swing bottom. So when we identify that a non-failure swing occurred, and at the same time we see the market changes its direction, so this valid swing low, it got taken out, and the market now it made the lower low, we have a clue that, hey, here there is something significant going on. Guys, if you learn this type of trading, which I'm explaining now, and if you applied it in any time frame from 1 minute chart to 1 month to the monthly charts, any time frame, but you master this strategy, I guarantee you that you're going to transform your trading massively and rapidly. Okay, why is that? Because it's the market dynamics. So we can see the market making this formation with a non-failure swing at the top. Now we know that the big players are selling the market down there. So if this is a clear and high probability impulsive downwards move, we do definitely want to participate in that one. We don't want to stay on the sidelines. How can we enter? We do a bit of analysis here. The first thing, we identify that there is a bearish order block around this area. At the same time, we identify there is a fair value price, and please, it's not a fair value gap as you see it on all YouTube videos, it's a price. The gap is when you have a distance between the candles because of the brokers and market orders that hasn't been filled, okay? But in this case, this is not a gap, this is it's just a fair value price area. So It starts from here to there with the method of 3 candles, as we explained in other webinars. So at this point here, also, we have what we call a volume candle. Why this is a volume candle? Because it's extremely long compared to the other candles here. It has a very long body, and usually the middle of this candle, so 50% retracement from its high to its low, the middle of the candle has the most significant amount of sell orders. Okay, that's as a general observation. Why we want to focus particularly on this candle is because this candle also causes the change of market direction. You can call it change of market structure, change of market character, however you want to call it. The price was making higher highs. That was the swing low. The price broke below the swing low, and it created this new market trend. So this makes a high probability setup by looking around the middle of this candle. Now, there is something that traders, in many times, they are missing from their trading. They don't understand when enough is enough in trading. I will repeat that. You need to understand in trading when enough is enough. Okay. What do I mean by that? The market has boundaries, and as retail traders or prop firm traders or whatever home-based traders, let's put it that way, we need to learn where our boundaries are, because we don't move the market. We are not the market movers. Our money that placed on the trade are insignificant to move the price. So we need to understand where the big players are taking trades. So the low of this candle here is considered a significant area on the price. This is 1.07700. Also, the previous week's low, which is this one here, it's another significant price on the chart. Now, pay attention to these guys. If the price reaches these areas here before it comes to the area we are looking to trade short, I will be looking to take trades around this area from Monday onward. But if the price prior to that, it will move downwards like this, and it's gonna tap into this area or that area, most likely we're gonna see some long bullish candles if it's gonna bounce off. If it's not, in case it's not gonna break through, but if it's gonna bounce off, it will give us the clue that, hey, the move is over. Your plan it's not applicable anymore, and just wait for the next market clue. It's like the bus already left, didn't make a stop where we expected it to make a stop, and we need to focus on the next opportunity. Does it make sense? Please, I'm giving you one of the most powerful ways to trade early the trends in the market. It works day in, day out. It works in all and every single time frame. It's important. Master this, and you're going to transform your trading. Okay. Let me know if you have any questions. So I'm going to be looking for short positions here. Okay. So next one, Australian dollar, US dollar. This is also very promising because on the weekly chart, we have a very weak Australian dollar. Now, The previous week's low, it's down here. If the price penetrates it, then it's going to do it, let's say, from tomorrow during the Asian trading session. If the price penetrates it and move lower, we will see here this low point to be taken out. If the price will penetrate that one, we're going to see this lower point be taken out. But on the weekly chart, looks a bit narrow. If we scale down on the hourly time frame, we will see that the market is in a nice trend. But be careful, because the trends at some point will end. Alessandro, I see that you asked something. Just allow me some time and I will read your question and I will answer it, of course. So on this one here, I marked 3 fair value prices, one there, one here, and one up there. Now, there is a space between this one and that one. Between this space, there is a resistance here, a resistance there, which I don't mark them on the chart. Why I don't mark them on the chart? Because if the price will penetrate these fair value prices, and if it's going to do it decisively, which means with long bullish candles, it will automatically push the price to the next fair value price area. All right, this resistance here won't hold at all, because the market will need to retrace a portion of the weekly price action. So understand, from this point here to that point there, if the price now retraces somewhere at 61.8%, we can try our luck, we can get into the trade here. If the price won't melt down immediately and you see it just moving sideways, you can manage the trade accordingly. I will be closing the trade, of course, because I don't like to give hope in any trade. Either it works fast or it doesn't work. Either way, it's with me, it's fine. I just scratch the trades and I move forward. From a level of resistance, the price must move rapidly to the downside. And the same from a level of support, the price must shoot upwards. Are you comfortable so far? Are you still awake? Did anyone fall asleep on the computer? Are you still here? Yeah? Do I look more serious tonight? Okay. So if the price penetrates this area here, we expect it to go to the next one. And if penetrates this one, we do expect it to go up here. So we have a good opportunity to get some good trades either way. Okay, so let's keep our focus on the Australian dollar and on the euro this week. Now, of course, other currency pairs are significant, and we're gonna have the non-farm payrolls on Friday. Non-farm payrolls, they're gonna bring enormous amount of volatility in the markets. They're gonna reveal what's going to happen with the US dollar in the next week, of course. So let's pay attention to that. If you are a day trader, please understand that this, especially the euro US dollar, next week until Friday, during the New York trading session, I'm talking from experience only, it's going to move sideways. Most of the times it does. If you see a very narrow span range of the euro US dollar, don't be surprised. Don't think that you are doing something wrong. It's just the way it is. Okay. Now, the sterling, Great British pound against the US dollar. On the weekly chart, what do we see? The price made the lower high and the lower low. Not as long candle as the Australian dollar, which means that the Great British pound was stronger than the Australian dollar. On the hourly time frame, I like that the price now started moving below this 50-period moving average. It also created, from this higher height, created the non-failure swing top, which means here we have a lot of stop losses that they started the move to the downside. The price created a new market structure, but it's better to trade, in my opinion. Let's wait. Not it's better to trade. Let's understand that during this move here, there is a fair value price still need to be mitigated. So we do expect the price to come all the way down here. If we're going to find some reversals, already the market has a fair value price here. There is another there. Maybe we're going to see another there. I don't know. So maybe we can get also some reversal towards the upside. Okay, we can take advantages of all this stuff, guys. Alessandro said it's a very nice lesson this evening, learning a lot. Thanks, you are very welcome. Bob Polola said, yeah, Nick said still here and taking it in and making notes. Wow. Following, thank you, Alessandro. Hugo said, hi, Theo, can you please analyze USD Japanese yen? I want to know what you think about the aggressive bullish trend last week. Yes, definitely we'll go there. Alessandro said US election. That's a question, actually. Trump is supposed to win according to prevision I saw online. Should we expect US dollar to be very strong compared to all other currencies this week? Basically, yes and no. We're gonna see more of these moves on the US oil and on the gold rather than on the currency pairs. Okay, so just to put it that way, we're gonna, this week the US dollar will reveal its move, I believe, on Friday in the afternoon after the ISM manufacturer index reported. That it's going to be after the non-farm payrolls. Okay. Moss says, hello, how are you doing? Tommy said, I'm here too, learning much. Thank you, Theo. You're very welcome, Tommy. So let's see what's going to happen with the sterling. It's not like it's the most, let's say, meaningful chart, this one, but let's see what can we do with this one here. USD Japanese yen. So last week we said that the price made higher highs and higher lows, and only if we see the previous week's low get taken out, then and only then we will go down to the lower time frames and look to short it. If we see the price makes a higher high on the weekly chart, definitely we want to be a buyer here. But there is something else with this one. If you observe a little bit the Fibonacci levels, what did I press here? The 61.8% from the swing high to the swing low on the weekly chart is right here. It's about to be touched. We also had this fair value price, which the market last week filled it up. So what I will expect happening next week is, if the price gonna make a lower than this low here, then we definitely gonna be in a solid downtrend. But if the price will keeps make higher highs and higher lows, we have to use this as the major resistance. Okay, this downward move now ended, and we have an hourly uptrend. In this hourly uptrend, I don't see this hourly uptrend, market make higher highs and higher lows. It get accumulated at the bottom. I don't see any fair value prices. I don't see any valid order blocks anymore. What I see, it's only this demand zone down here, DM, demand zone. And if we're gonna trade something, better we use stop losses below this low here. Okay, if we're gonna trade the hourly time frame. Moses asks, can we please know the trading times of each country? to US to give us more info of trading? What do you mean? Like trading from Asia to the UK? So Asia usually starts at 3. I'm talking based on the brokers. Pretty much all brokers, they have their servers synchronized at 12 a.m. Cyprus time. Okay, most of them, they have their reset service in this time, which is 10 p.m. UK time. Now, I will say in terms of the Cyprus time, and you make the convention. At 3 a.m. Cyprus time, it's the Asian trading session. Prior to that, it's the Sydney trading session, which we don't usually trade. So Asia starts from 3 a.m. and it goes until, let's say, for 8 hours. At 10 a.m. Cyprus time, which is 8 a.m. UK time, it's the London trading session, which goes, I think, until 6 p.m. Cyprus time. Then at 3 p.m. Cyprus time, it's the New York trading session that starts. Okay. I hope that helps. So that's for the USD Japanese yen. I would like to discuss also very quick the USD Canadian dollar. Remember last week I told you about particularly this one. Why? Do you remember why? Because the Bank of Canada was about to report their interest rates, and the consensus was giving a drop on the rates. Okay, so we said that if the Bank of Canada will drop the interest rates in Canada, we will see a very weak Canadian dollar. And guess what? A very weak Canadian dollar means that it's going to push the exchange rate of the USD CAD upwards, because the currency pairs, they are trading in pairs. When one goes down, the other automatically goes up by default. Okay, they are connected like this. They never separated. If the Canadian dollar goes down, immediately the USD is going to go up, and vice versa. So on the hourly time frame, actually, that was the focus of my trading last week. Okay, so I found this bullish engulfing right there. I took the trade. I put a stop loss a little bit here because it was prior to the New York trading session, and I didn't want to get into some kind of sudden moves and stop out anywhere in the middle. Anyway, the price moved upwards because I always go for 2-to-1 reward to risk or more. When the market, I have my, let's say, my rules when I trade. And at a certain point, I move my stop loss to break even. So that's what I did. And the price didn't reach the target, which it was at 2%. And I got stopped out at break even. I lost a little bit because of the commissions by the broker. Next trade, it was the day after, bullish engulfing here. That was a little bit more than 2-to-1. So that was a good trade. And then that was a no-brainer. I mean, if you were watching this one, the price make higher high. It came down during the Asian trading session, and the London trading session, it played around. It was a bearish engulfing. Let me show you the market dynamics and why you need to read candlesticks. Bearish engulfing here, and everyone was thinking, this market is going down, and then a bullish engulfing with the uptrend within this conduct. Bullish engulfing here, entry, stop loss. My take profit is up here. It's still running. Anyway, it's on the break even area. So if it's going to reverse down here and take it to the break even, let it be. The purpose is done. I mean, the trade is done, okay? And let me share something with you guys. You make money when you enter the market. You don't make money when you exit the market, okay? Think about that. You're gonna make the money when you enter the market, because you need to apply reward to risk, the good reward to risk, and you need to apply as well, you need to trade a solid trading plan, okay? I mean, I don't want to dig more into that because it opens up a totally another window of trading discussion, and the time it's limited here. So yeah, but pretty much that's it. And if you see in all the trades here, we were going long. I was going long here. All the price action was above this 50 period moving average. Price action above the 50 period moving average. Price action was bullish and engulfing in all three trades. Okay. So and I told you many times, the market respects, especially on the hourly time frames, it respects a lot the 50 period moving average. Okay. The big hedge funds, the traders that they move the markets, they use these moving averages. They don't use what you see on the internet, smart money concepts and all this stuff. They use moving averages, they use Bollinger Bands, they use divergences, they use market profile, they use stuff that most of the retail traders, unfortunately now, they've been told not to use them. And imagine that when I was doing my preparation for the exams in order to become certified market technician, do you think that we were using smart money concepts and all this stuff to become qualified as market technician? Absolutely not. Because if I analyze you, everything that comes down to the way that smart money concepts are presented into there is not exactly what it looks like. Okay, I'm not saying they don't work. I'm not saying it's not good to apply them. I also apply it at some extent into the trading, but I will never base my trading there. Okay, I will use them as an add-on filter into my trading. And because I know that many of you now, you don't want to buy any education, you want to go and find everything for free on YouTube. And my purpose is to try and make sure at least that what you're gonna learn from the YouTube, it has to be the way it's going to help you to build up a successful trading career. Okay, now this is where the focus is going to be next week. Also keep an eye on the Aussie Swissy and New Zealand Swissy. The market, it's in a nice trend on these two. Swiss franc is considered strong currency since last week. If you see the weekly chart here, that's the Australian dollar Swissy. The price made a bearish reversal within a downtrend, so I expect this to be continue. Also with the New Zealand Swissy saying market downtrend, moving averages are down, bearish candlestick point downward. On the hourly time frame, there is a very tidy and significant downtrend. Let's wait for a retracement. There is a fair value price here, if you prefer it. So let's see if the price will arise here, and we're going to take some trades short. But see how the 50 period, just I spotted now, see how the 50 period moving average worked pretty well to get trades here or here. All right. So I think that's all from me today. Boab said Cyprus is my favorite place to stay. Other than here in Scotland, I go to Paphos twice a year. If you are in Paphos, just send me a message to catch up for a coffee. That's where I live as well. Hugo said, great session, lesson this week, Theo. Thank you very much for your insights. Surely they make my trading journey more wisely. Wow. Amazing. So, everyone, thank you so much for tuning in. I hope that you gain a lot again tonight in this webinar. I would like to wish you to have a fantastic and profitable week ahead. Of course, I'm sure our traders, they are doing their best to send the best signals out there in the premium channel. So have a great night, and I will see you all again next Sunday. Thanks for tuning in. Bye, everyone.